Hello there, good to see you all again. Thanks very much for coming. And it's the usual format. I shall share my screen. Am I sharing my screen? Can you see? Yeah, you can. Yes. Okay. Sorry. See you, mate. Always doubting. Should never doubt. Right. So welcome to episode number, I don't know, 50 of the Wednesday webinar, going through the energy charts for you fine people who are trading these markets. And we shall start where we always start, with Brent crude. And Brent crude, let's have a look. This is our daily chart, and things livened up a little bit yesterday, didn't they? Things were a little bit dull last week, to be honest. We got up to this 50% retracement line here at 43.80, and then sold off. But last week's low was 40.96, and we really didn't do much after that. Sold off to that area again to yesterday, 40.84, and we've got a red candle with Marabou's line at 42.14. If we look at the intraday charts, this is how things panned out. This is the 30-minute chart, and there was where it broke lower, after the first hour of US trade. 42.13 was the low there. So we've got Marabou's line and an intraday level all lined up at the same place. Interesting stuff, and an interesting place to potentially put a short on today if that's the way you are, which is what I would suggest. If we're looking at light sweet crude, similar looking chart. It's been a little bit messy, and obviously it's month end today as well, so that could add to the mess if you like. 39.93 is the Marabou's line of this large red candle, and 39.69 is that breakout level. So it's like not as neat and tidy as Brent crude with respect to where you might want to put a short on today, but downside risk, thinking we'll go back to that 36.07 level. What's interesting about WTI, and if I can find the right chart, I might be able to talk about it, is the November only chart, which is now the front month, and the fact that the recent sell-off there on the 8th of September took back almost exactly to the tick 38.2% of the rally there that we saw between April and August. So that's Fibonacci working like an absolute dream. And that means that that's a really important level, around 36.56 to 36.60 in Brent. In WTI. Next chart we usually look at, I don't want to look at because it's an absolute pain in the bloody backside, if you ask me. US Henry Hub natural gas. We've had all sorts going on in the last week or two, and I'm going to hold my hands up. I can't make a lot of sense of any of it, to be honest. So it's a messy looking chart. It's not really giving us any clean and clear signals, but obviously a big bear day yesterday. And maybe we're going to go and have another look at that 200-day moving average there at 2.444. So that's gas on that side of the pond. On this side of the pond, the UK MVP gas has been defying the fundamental crew and going up. But yesterday, we actually, once the rollover was done, we saw a red candle. Here we have a red candle with a real body that surrounds or engulfs the green real body before it. That is called a bearish engulfing pattern. Sorry, a big old sneeze in the middle of it there. Wonderful. Hopefully I didn't spill anything while we're doing this like this. Drink of water. Carry on. UK gas. 38.05 is the Marabou's line of that red candle, that engulfing line, and 38.05 is today's early high, bang on. So that's a little bit of encouragement for the bears, but we haven't followed through that much, and we are asking to see 36.45 to 36.60. We want to see that area breaking before I think any real bearish thoughts on this one. Why that? It's a Marabou's line on the daily. There's a vacuum there on the the profile as well, and it's a high volume node, although this is new data and we're still building the volume there. But it looks to me that's enough for me to say that's an interesting support area. What do we need to do to say, okay, we can go lower? That's what I would say. Break 36.40. That's what we need to do. Let's go to Montel charts now to look at the Dutch gas. And yesterday, similar kind of thing, bearish engulfing pattern. Yesterday, made a new high for the move. No, I want to stretch it out that way. Got up to 1403.5 and then sold off. Sold off to a low of 1338.5. We had a gap support there at 1327, 1328. So again, can we confirm the reversal pattern? Yes, if we break 1328. And what's happened this morning is 1325.5 is the low. So we're holding that. We're not getting a confirmation of the sell of the bearish candle. We're not getting a sell signal on that yet. And as I've been saying to a few people who've been emailing me about gas markets, you know, why? Well, I don't understand why they're going up. Well, nor do I, but I'm following the trend and I'm sticking with the trend, and the trend is higher. And that's pretty much the end of bloody that. Now, Monday's report spoke a little bit about German power and the potential double top we might be forming here, with a high there at 43.25 on the 31st of August, and another high there, exactly the same price, 43.25 on the 15th of September. The low between those two highs is that low from the 9th of September at 40.21. If we break 40.21, we get a sell signal, and the target is somewhere down here, 38 something, I think. And arguably with this one, we may even be forming a bigger top here with this high and these highs here, and that would trigger further selling if we sold off through through that 27th of July low, which is 38.61. So potentially two double tops forming there. We haven't got a clear we haven't got the sell signal on either yet though. And for now, for today, we're keeping an eye on Marabouzo support somewhere around 41. I think, what did I say in the report today? 41, 41, 41, 41, blah, 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 there it is. German power. 41.20 is our key support that we're watching, and it's holding. So, but we've got to stick with the balls on that basis. Right. What else? Let's have a look at coal, and then we'll go to carbon and finish off there. Coal has been on a decent run, but has posted the last two daily candles had the same high, and two candles next to each other with the same high are called a tweezer top. Could we confirm this? We opened lower this morning. That meant that 60.00 was instantly gap resistance. We didn't spend much time above there. We did see a 60.40 print by the look of things. Now we're down at 59.60. Trend line is at 59.00. And again, as I said in the report today, we've got this tweezer top. It's not the strongest of reversal patterns, but if it's got anything to say, then look at all these supports. 58.95 to 59.00 is a bold support. 58.35 is a bold support. It's a gap right there. And 58.02 is the 38.2 retrace of that move there. So that is a level. They're the three levels, all with the 58 handle. So you could argue that it's got a lot to do before we want to get too bearish about that one in the short term. Finally, zoomed through this today. We're very quick, but I think that's the way forward with these, especially as it seems to me we've got a whole bunch of people that are just waiting for the YouTube link now, because we haven't got so many actually on the call. Now I've got the chat open. Now is your time to give me a shout if there's anything else you want me to look at before we end things. And in the meantime, let's have a look at carbon. Carbon had a decent rally on Monday, but gave half of it back and a bit more yesterday, and he's on the back foot again today. And I think that hopefully you read yesterday morning's report, because the price action we saw in the very first half an hour. And that's why I like to wait for the open to see where things are going to open. We saw some bearish price action in the first half an hour yesterday, which gave us an instant clue that things could, we could be in for a week a day. And sure enough, that's exactly how it panned out. A lot of people have been asking me about bigger picture sort of views on this one. And what we can see is a potential double top because of those two highs at the same price. We've got the high there from the 13th of July and the high there from the 15th of September at pretty much the same levels. Low between those two highs is 24.82, and the 38.2 retrace of the rally since that low back in March is at 24.51. If, and this is an if, we do not have this signal yet, but if we sell off through both of those, we go to here, 1890. 1890 is that trigger level that got me all excited on the upside back in May, and when I said we can go to 2720, and again, that's well documented now that not many people believed it could go there, but what we actually did was go all the way back and almost hit that 31 handle. So that is a potentially interesting development, and I guess the power chart with a potential double top kind of maybe that fits in with those sort of ideas as well. But for now, in carbon, we're kind of holding in this neutral zone. We're sticking fairly close to this to value. The most actively traded price for this is 27 euros, and that was the high first thing this morning, which was a failure at yesterday's. This is the 30-minute chart. Failure at yesterday's value area low on the market profile. So that was interesting. Pivotal area around just below there as well. Yesterday's low was 26.97. And that's where we and so we opened down here today. All we've actually done mid-morning was go up, fill the gap, and then fall over again. Bearish price action in the short term, but to get a really big sell signal, there's still a bit to do. Okay, it looks from the chat as if no one's put their hand up and asked me to look at anything else, so I will not keep you any further. Hopefully, thanks very much for tuning in, and let's do it all over again next Wednesday. Take care of yourselves, and wash your hands and all that business. Cheers, guys. Take care.